Hi, good morning, everybody, and welcome to the California Bank and Trust SBA Financing Options to Help Your Business webinar. My name is Adrian Pava. I'm a Senior Vice President, Regional Sales Manager, and I run the SBA Lending Department here at California Bank and Trust. We're excited to present this webinar to you today. Many of you may know that there is a National Small Business Week, which is happening right now between May 4th and May 10th, which is an event that is put together by the SBA annually and is an opportunity for small businesses to be recognized, to be connected to resources, and to get connected to different events like the webinar we're hosting today. I'm really excited because our webinar is going to cover some of the best practices around submitting applications to the SBA, navigating the process when you submit an application, and we have our panelists who are going to be going into very good details around the different programs available, things to think about, things to avoid, and really help you be prepared should you decide as a business owner to move forward with financing. With that said, I want to introduce the speakers that are going to be on the webinar today, starting with Justin Simpson. He is our Senior Vice President and Enterprise SBA Administrator for Zions Bancorp, and he'll be joining us today. We also have Hillary Leone. She's a relationship banker at California Bank and Trust. We have Zadel Cabrera. She's one of our amazing clients that we helped acquire 2 businesses through the SBA program. And last but definitely not least, we have Michael Sovakul, who is the Acting District Director of SBA for the San Diego region. With that said, I'm going to hand it over to Justin to share a little bit about what he does on a day-to-day.
Thank you, Adrian, and good morning, everybody. So my name is Justin Simpson. I'm currently our SBA Administrator for Zions Bancorp, with California Bank and Trust being our affiliate located in California. I've been in the business for about 15 years. I oversee all of our SBA loan programs across the states that we're in, and we spend all of our time helping small business owners get the financing they need. So we're going to talk about those programs today, things that we can do to help you, and things you can do to prepare if you're looking to get an SBA loan.
Thank you, Justin. You're one of the most knowledgeable people, not just in California, perhaps in the nation when it comes to SBA, and I believe the audience is going to love the Q&A section with you. Up next, we have Hillary Leone. She is an amazing banker out of California. Can you share a little bit about what you do day to day, Hillary?
Sure, Adrian, thanks. I have been in banking for 30 plus years. I know I don't look it. Thank you very much. I help clients day to day realize their dreams. So that's my why. So every day I get up, I try to get the best resources and help them with solutions that we can provide.
Absolutely. California Bank and Trust, our motto is to champion the small businesses of California. And you truly demonstrate that every day by helping your customers meet their goals, whether it's financially, professionally, and in this case for Zadel, who we'll be introducing next, it was a personal dream of hers. So thank you for all you do, Hillary. I'd like to hand it over to Zadel Cabrera, the owner of RC Premier Via 1 and 2, to share a little bit about what she does as a business owner.
Hi, my name is Zadel Cabrera, and I am an occupational therapist. And recently I ventured to owning 2 care home facilities is one of my dreams. With the help of California Bank and Trust, I was able to purchase these 2 homes with their SBA loan programs.
Great. Up next, we have Michael Sovakul, who is a figure here in San Diego and has been with SBA for quite some time. I'm going to have Michael share a little bit about what he does day to day. Michael, off to you.
Yeah. My name is Mike Sovakul, and I'm with your Small Business Administration here in San Diego. It is National Small Business Week. Welcome to that. What we do here with the SBA is help energize the small business ecosystem here in San Diego. Primarily, we help small businesses start, grow, and expand their business through counseling and training, assistance in government contracting, and most importantly, and the focus of today, is access to capital. So on behalf of all the SBA and the 300 and some thousand small businesses in San Diego and Imperial counties, welcome to Small Business Week, and thanks for putting on this webinar.
Absolutely. Before we get started with the webinar, I do want to remind people we do have a chat feature, and we will also have a Q&A at the end. So please feel free to use that feature if you have questions. You have a panel of experts who have not just done this for several years or decades, but you also have our very own customer who went through this process. So I encourage you guys, don't be shy with your questions. We're here to help, and we want to make this as interactive and as helpful as possible for you all. So I'm going to go ahead and get started. The first topic that we're going to talk about is an overview of SBA financing. We know that SBA, being a government program, can seem overwhelming, and I want to hand it over to Mike to give an overview of the typical programs that the SBA provides to small business owners.
Okay, I'm going to talk a little bit now about the SBA loan programs, the suite of loans that the SBA provides. I want to state up front that the SBA, the government, does not make any direct loans to small businesses unless it's in a period of disaster, pandemic, then those loans are direct from the government. But for most of what the SBA loan guarantee program does is the SBA provides a guarantee to the lending community. And that makes the lender more inclined to make a loan to a small business. And so your lenders are fully familiar with the programs and how to get the process started and completed. Here in San Diego, we're blessed to have a lending community that's collaborative. They work together. They understand the programs, and they understand the intent of the program is to get capital into the hands of those entrepreneurs who need it to help their businesses start, grow, and expand. There's three basic loan programs with the SBA. There's the micro lending program. There is the 7A lending loan program, and then there's the 504 program. Don't let those numbers confuse you. The lenders know what they mean. In your discussions with the lenders, they'll guide you to the proper loan program. So don't let those numbers and letters confuse you. They're just classifications of loans. The 7A loan program is the flagship loan program of the SBA. It'll provide you loans of up to $5 million that'll cover any legal business purpose. Buy inventory, improve real estate, help with the financing of employees. And so any legal business purpose, the 7A loan program will provide you some capital to help your small business. The 504 program is a program that it is for larger purchases, large equipment, a purchase of property. That is I'm going to call it a three-tiered program where you, as the borrower, will be expected to contribute a small amount. The lender will work with the CDC in providing, the CDC, I think, provides 40% of the loan, and the lender provides 50% of the loan. This is for large capital access purchases. The beauty of both loan programs are very competitive interest rates and extended payment periods. The periods can go out to 30 years for the 504 loan program. And even in the 7A program, there's varying degrees of terms of the loan. And so what that does for the borrower, it reduces the monthly payments, and it makes it more competitive for that small business to get off and running. So those are the three basic loan programs for the SBA for small businesses.
Thank you for that, Michael. I'd be remiss if I didn't thank you and your entire staff here in San Diego. Whenever there's, not just for business purposes, but like you mentioned early, disasters or things that happen, the SBA does more than just help small businesses. So thank you for everything you and your team does, everything that happened to PPP, and everything you guys are continuing to do through all these changes. I'm going to hand it over to Justin to talk more specifically about California Bank and Trust. I know we've helped hundreds of customers this year alone submit applications for SBA. Would you mind sharing with the audience in the webinar, what are some of the common programs that we typically work on here at CB&T?
Absolutely. So just so everybody knows, California Bank and Trust is a preferred lender with the SBA. What that means is that we've demonstrated to the SBA that we have the ability to fully underwrite, process, due diligence, and follow all the rules. So the SBA said, great, we're going to give you the authority to do that on behalf of the SBA. And so we fully underwrite, approve, do all the due diligence. And then at the very end of the process, we just submit to the SBA for their final eligibility review. But ultimately, it's California Bank and Trust who makes those decisions on approving your loan, and that makes the process go faster. So as Mike said, the SBA loan programs will allow the SBA portion of the loan to be up to $5 million. Primarily where we fit most of our business owners in is to the 7A loan program, right? That allows you to purchase, improve, construct real estate, acquire other assets like vehicles, equipment, inventory, facilitate the acquisition of a business. Zadell is going to talk to you about today how she took advantage of the program to buy a business. It also, as of the most recent update 2 years ago, allows us to do partial changes of ownership. So if you're looking to do a partial buy into a business, or you want to partially sell your business, we can do partial changes of ownership. And then also we'll facilitate anything that you need for temporary or permanent working capital to cover the day-to-day operations of your business. One of the things we really do at CB&T to help our business owners who need small dollar loans, which is one of the big passions of the SBA, is on loans that are $150,000 or less, we have streamlined our underwriting process. And we don't require the borrowers who meet the SBA score criteria to provide us with financials on those loans that are $150,000 or less. In essence, making the underwriting process quicker so that we can help get access to capital to those businesses who need it, including startups, established businesses, or any of the other purposes we just talked about.
Great. Thank you so much, Justin. You bring up a really good point. Right now, California Bank and Trust does have a customer offer for any applicants that are applying for a 7A loan. We're currently offering 150 basis points off our already competitive rates. And that is definitely a loan program that's taken off and helped dozens and dozens of small business owners get the capital they need. Another question that comes up, Justin, is how do I know if I'm even eligible for an SBA loan? What are some common things a business owner should be thinking about eligibility?
Yeah, so Adrian, a couple things to really think about here. First thing, business has got to be for profit. So that means nonprofit entities are not eligible. It's got to be in the United States, and it's got to be considered small under the SBA size standard. What everybody can do is if you go out to Google and you type in SBA size standard into Google, you'll get the SBA's website where there's a document that you can open up to see if your business meets just the general size standard. The SBA publishes it by the NAICS code. If you're not quite sure what your NAICS code is, look at your tax return. You look at the NAICS code that you filed with the IRS last year. And so you take that six-digit NAICS code, and the SBA will tell you you're either eligible by your gross annual revenues, if you're under the limit, or by the number of employees. So those are the two, size standard criteria. If for some reason you don't meet one of those, say you're a larger business, they do have an alternate size standard that we can also assist with to help with that. The other thing is that all businesses must be 100% owned by U.S. citizens, U.S. nationals, or lawful permanent residents, i.e. those individuals who are here in the United States on a green card. The other thing that I would also bring up is so those are kind of the big criteria. I want to talk to you about some businesses that are not eligible because there are some areas where the SBA would exclude a business. First one is businesses primarily engaged in lending. So banks, finance companies, factoring companies, those businesses that make loans and hold them on their books are generally not eligible. Passive income businesses, that's really defined by an individual who would be, say, a real estate developer or investor who receives most of their income via rents. If that's your primary source of revenue, you're probably going to fall into a passive business and not be eligible. The SBA does have the ability for a business owner who does have an operating business that wants to buy real estate to set up a real estate holding company in conjunction with this business. Those are still eligible. The other thing that comes up a little bit is businesses that are not legal under federal laws, i.e. a marijuana business is still not eligible for SBA financing. And then last thing I'll bring up is businesses that had a prior loss to the government. Now, one of the things we've seen lately since PPP and the COVID EIDL program, i.e. the disaster loan program, is several businesses may have got one of those loans, and if it wasn't repaid or forgiven through that process and did cause a loss to the government, they wouldn't be eligible until they get that cleared up. So that'd be the last thing that a business owner would want to look at to see if they're eligible.
And Justin, we actually have one question in the chat from an Andrew. The question is, are 501c3 able to participate in the program?
They are not. So 501c3 would be a nonprofit organization. And the way the SBA rules are today, nonprofit organizations are not eligible to get financing.
Thank you for answering that. And for the audience, if you guys have any other questions, continue to please put them in the Q&A, and we'll either answer them live or we'll answer them at the end. Another thing I'll let the panelists know is for anybody who is interested in SBA financing, which we know the majority of you that are on this webinar have expressed that interest, please make sure to reach out to us after this webinar, because we have a very simple, maybe 2 to 3 minute eligibility set of questions that we can go through to help you understand if your request is eligible. And we would be more than glad to do that for you at the end of, after this webinar. What I want to do is now turn it over to Zadell to find out what loan program did she decide to use and what did it actually allow her to do.
Okay. So with the 2 care home facilities that I just purchased, I was able to have it with the 7A lending program. That's what they have, which allowed me to purchase the real estate and the business at the same time. So that's what the kind of loan that I got for my 2 care home.
And I think this is amazing because Zadell didn't just have the opportunity to purchase the business and having her dream fulfilled of being a business owner. She was able to use the 7A loan program via SBA to also purchase the real estate. And many of you guys might have questions around that, but speaking to Zadell previously, one of her goals was to know exactly where her business is going to operate, be able to have a long-term future, and be able to have more control of her business. So she was extremely savvy at preparing for that. So thank you for sharing that, Zadell. Handing it back over to Justin, one of the questions that comes up is when a business owner is ready to apply for an SBA loan, how do they best prepare so that they have the best chance of being approved?
Yes, there's actually a couple different things that they can do. The SBA does give a lot of great resources on its website. Anybody who just goes to sba.gov will get to their main landing page. About halfway down, you'll see the extensive resources that the SBA provides. Most of those are going to be targeted towards startup businesses. So businesses, what they need to do to get started, writing a business plan, preparing their documentation, putting together projections based on the size of the business to put those together. An existing business owner really doesn't have to do much to prepare other than identify a great bank and a great banker that they want to work with. One of the things we do at California Bank and Trust to make it easy is based on what your needs are, we've got some checklists of documents that you would need in order to apply for the loan. Keeping in mind that one of the other core eligibility requirements is that you can't be eligible for a conventional loan and get an SBA loan. So ultimately, when a banker is assessing your needs, if you're eligible for a conventional loan that would not require an SBA guarantee, you may have other options of things that you can get that wouldn't necessarily require you to go down the SBA route. If the loan does not meet those conventional criteria, that's where the SBA loan program comes in. And one of the questions that I just see in the chat here is what type of collateral was required? And I love that question because one of the core criteria of why a loan would be eligible or would go SBA is because it's limited in collateral. You heard Zadell talk about that she bought the real estate, right? Financing real estate is pretty straightforward. She got a piece of real estate. Conventional loan would normally require a 20% down payment. The SBA 7A and 504 loan programs both can require just 10% down, so lesser down payment. But oftentimes when you're acquiring an existing business, one of the things you're acquiring is what's called goodwill, right? It's the cash flow of the business, may not necessarily be a tangible asset, right? It's the business that's been created. Well, that SBA guarantee helps us as a lender do that loan that may not have collateral or lesser collateral because of that goodwill, which is why most business acquisitions are financed with an SBA loan. So my recommendation would be, get with your banker, whether it's with California Bank and Trust or your current bank, make sure you have a good partner alongside you and find out what their document requirements would be to get started. The other piece that I'll just add is we kind of take our loan process in bite-sized chunks. So we're going to tell you what we need to get your loan approved first. We're not going to give you the whole list of everything you're going to need from start to finish unless, of course, you want it. We'll just start with what do we need to do to review and approve your loan. Once your loan is approved, Then we'll go down the next list of what are those items we need to do to meet the due diligence requirements, i.e. eligibility, dot our I's, cross our T's, to then move towards documentation. And then if there's anything at the end that we need to do, like get updated payoffs, if you're doing a debt refinance or some other use of proceeds, verifying disbursements with current copies of invoices on things you want to purchase, we'll do those right at the end of the process so everything's current and good for you.
Thank you, Justin. And I hope, Azita, that answered your questions around what are the requirements for down payment. One of the other questions she had, Justin, was what are the requirements for purchasing a business?
Yeah, so purchasing a business is generally the same thing. The SBA's minimum equity requirement, so the portion that the borrower has to put in is 10%. Underneath the updated SOP that's coming out, the seller may give a note to cover up to half of that, of 5%. So generally speaking, if you're looking to buy a business, you'd want to be prepared to have at least 5% down. Obviously, if you're putting more down, it only strengthens the position that you're going to be in that business. But 5% of your own money with a seller carry note of 5% or 10% of your own money would be the minimum standard.
Thank you, Justin. I know you're providing some really good information that these business owners will likely want to reference. As a reminder, this webinar is being recorded and I believe will become available shortly after in the event you want to re-listen to it. Another question that came through the chat is, can one finance a business expansion on projections for a new business?
Yeah, it's a great question. That's one of the other great ways that we leverage the SBA loan program. And so as you can imagine, we use the SBA loan program to finance startups. Startups obviously don't have historical cash flows, so we would get projections in doing that. One of the things that the SBA will require, and one of the things you want to prepare for, is 2 years of projections would be required. And the first year you need to spell it out by month. So you want to put your projections on a 12-month basis, show each month what those projections would look like. And then one of the things we do is we compare that to the industry. So one of the things we really help a business owner do is look at their projections compared to what others in their industry are doing and see if they're in line and help them understand what that cash flow looks like and how the business proceeds. But yes, we do a lot of loans based on projected income. One of the other pieces where projected income comes into is you may have a business that's rapidly growing and expanding, right? They may be, doubling or tripling their revenue year over year because they've got a phenomenal business. Well, in a conventional loan program, and you're looking at that historical cash flow, it may not meet the debt service for a rapidly growing business. But having projections on that and going underneath the SBA loan program is a great way to get the financing that you need to help a rapidly growing business have access to the capital that it needs to continue growing.
Great. I'm going to get to everybody's questions, but before I do, I want to keep going with some of the topics we have. Zadell, when you decided to purchase this business, what were some of the first steps you took to prepare yourself for the application process?
First and foremost, of course, I have to identify the business. Okay, I have to have a due diligence study of the facility or the business that I'm going to purchase, and I want to see the location and how will I be able to contribute to make that business grow, because my goal is to have a profitable and have a good cash flow business. And knowing that, also I have to make sure that I have that down payment available. So I have to make sure I have that, because this is a loan, and I know I've been told that with the SBA loan you have to have at least the 10%, because I'm planning to get both the real estate and the business at the same time. So with that, I have to make sure I have that in my hand. And with both things, my down payment and my a good business potential that I'm going to buy, that's what I needed. And then I approach the broker that's what I showed to California Bank and Trust of what I have.
Thank you, Zadell. You mentioned some really good things. Number one is before you purchase a business, to make sure that it's viable, you review the financials, you ask questions, and you do all of that due diligence. Number two is you knew that depending on the type of SBA loan you decided to move forward with, there would be a certain down payment requirement. I know the importance, and one of the things that differentiates California Bank and Trust is the fact we have relationship bankers who are there with you from the beginning, even before you submit the application, and with you through every step of the way. Hillary, can you share what you did for Zedel and what you do for your clients in general to make sure that they're able to keep things organized, go through this process comfortably and confidently? What is it that you do?
Absolutely. So when Zedel approached me, I was honored to assist, get her to the dream and to the next steps. Generally, when somebody comes forth, we review the financials together, make sure it's a viable business. We also go over the parameters. Does she have industry experience? She does. She and her family are healthcare providers, and they're in the industry. Has she ever defaulted on government debt? Is there any other issues, maybe if there's no felony arrest, something of that nature? Those are the things that would disqualify. And then we go over the process, how we get it started, what we need, and then step by step we're there to go over each. As Justin says, you bite it down in little pieces. We'll get the approval, and then we'll get the other supporting documents, but we're there to hold their hand throughout the whole process.
And I can't stress the importance. This is kind of like if you're trying to buy a house without a realtor, it can feel overwhelming. It can feel scary. It can feel time consuming. But when you have a partner in your business, someone like Hillary or any of our other relationship or commercial bankers, you not just have Hillary, but you have myself as the SBA leader for California Bank and Trust. You have Zion's Bancorp behind you with someone like Justin, our SBA administrator for the enterprise. We're here to get you the answers you need so that you can feel comfortable and confident as you're making one of the biggest decisions probably in your life to start a business, expand a business, or continue to grow it. So thank you for all you do, and thank you, Zedel, for sharing. I'd like to turn it over to Michael, because in addition to California Bank and Trust providing resources and support, the government also has many different partners and resources available for people to take advantage of before, during, and after starting a business.
Yeah, good. Thank you. Like I mentioned when I was on earlier, that the SBA does three things: counseling and training, assistance with access to capital, and then assistance in government contracting. I'll talk a little bit about the counseling and training. If you're here in San Diego as a small business owner or a prospective small business owner, you're blessed to have the best in the nation resource partner network. And all of the individual resource partners have been recognized as being leaders. There's a Small Business Development Center here in San Diego. Our network has 9 distinct service centers. They're located throughout San Diego County and Imperial County. That's their total about 125 counselors and mentors that work with you from A to Z, no matter what type of business you're in. And so in that cadre of 125 business counselors and mentors, there's someone that is familiar with the type of business you're going to get into. And they can provide you counseling and training in this realm of access to capital. I think Justin mentioned being prepared when you go to meet with the lender, and to have a business plan, and to have projections, and to have a firm grasp on what it is your business is going to do and how you're going to do it. And so those counselors can help you work through all that. You don't need to jump into the process of starting a business or getting capital all by yourself. You can certainly do it by yourself if you're hard-headed like I am, or you can be smart and reach out and touch someone that can help you with it. And so they'll help you with your business plan. They understand what documents and what criteria the lender's going to check. And so they can help you prepare your package, your story, your personal business story before you go to meet the lender. That first meeting with the lender is important. They've got great relationship managers. They've seen just about everything. So sometimes we are afraid or nervous about meeting with a lender to get capital, but you don't need to be. They're in the business of getting you started, and they are business people. Mm-hmm. But I want to put the focus on the word people. They're people. They want to see you succeed. So there's the small business development centers. There's an organization called SCORE. SCORE is a volunteer organization. Here in San Diego, there's about 100 SCORE mentors and counselors. They provide the same type of services that the SBDC does. They've been very successful here in San Diego and Imperial County. There's the Women's Business Center. They provide the same type of services with the focus on women businesses. And then there's the Veteran Business Outreach Center. They too provide the same type of services to the veteran community. They also present a program called Boots to Business, where they meet with the transitioning veterans who are leaving the service, and they give them a 2-day package on what's all involved in becoming an entrepreneur. So here in San Diego County, there's great depth in the amount of resources and the people that are there to work with you. And so I would highly encourage you to reach out and touch them. If you're in business now, it isn't too late. Sometimes I like to use the phrase, we seem to think we need capital the most when we're starting. And sometimes that's when it's hardest to get. And so it's important that we're connected with people to help us in the beginning. But even as your business grows, it might be more important to reach out and touch some counselors and mentors, because that next step that you take, my guess is the loan's going to be bigger. It's going to be used to grow. And so getting advice and service from the resources available is important. And I just want to reiterate one more time that here in San Diego, we're blessed to have real professionals that are willing to help. They're skilled, and their intent is to make that small business succeed. So utilize those resources, and you can find them all on the SBA's webpage, and I think we're going to post it at the end of the seminar. And so reach out. If you want to follow up on those, you want to contact me, feel free to do so, and we'll make sure we get connected to the person that can best help you.
Thank you, Michael. I couldn't agree more with you. Being a previous advisory board member for the North County SBDC, I've seen firsthand the great work that the folks do there. And if you're a business owner looking to start a new one, looking to get into government contracting, I really encourage you to reach out, because these are professionals who've had, in some cases, decades of experience. They can meet with you in person, they can meet with you virtually, and they put so much care into your business. They're agnostic, so regardless of who you choose to get your SBA loan or financing with, it's their job at no cost to provide you the resources, education, and training you need to make sure that your business is prepared to take the next step. With that said, again, we do see a couple questions queuing. We will get to them shortly, so keep the questions coming and we will answer as many as possible. The next topic is around strategies to enhance your application. We know that it takes a lot of time, energy, and resources to put together an application and submit it. And as a business owner, you don't necessarily have the luxury of time because you're running your business day to day. So I want to ask Justin, when a business owner is looking to apply for SBA, what are some best practices that business owners can do to give themselves the best chance of being approved in an efficient and timely manner?
Yeah, great question, Adrian. One of the things we always look at, is obviously the 5 C's of character. Anytime you're applying for a loan, your lender is going to look at, your character, capacity, your capital, the collateral options, and the conditions of the business. One of the core requirements that the SBA has is that a borrower, a business owner, must have the ability to repay the loan. So one of the things that we can't use an SBA guarantee to do is mitigate negative cash flow. Now, with that stated, oftentimes we recognize that a business may be going through a cycle where they've made some changes in their business. They're going to significantly change the outlook for that business in the future. That's where the use of projections can oftentimes come in. If something's changed in the business that's going to likely, catapult it up, maybe they got a new contract or something that's going to generate a bunch of new revenue and profitability for the company, a projection-based loan is great there. One of the questions that I see here in the chat here, Adrian, is does my business need to show past profitability to get financing needs for equipment purchases? And so, the general answer to that question is yes. One of the things that we recognize here at California Bank and Trust is that, when businesses need a smaller loan, I've talked about those loans of 150,000 or less. The SBA does allow us to use the score and other criteria to meet the ability to repay. So a business owner comes in, maybe they're showing just a small profitability on their company, but when you look at the annual financials, you would see there's add backs like depreciation and things that actually did increase that profitability much more. But in loans less than 150, if they meet the score criteria, we're going to use that instead of going through the whole process of annualizing financials. So if you need a small equipment purchase, that may be a great route to go. You need a small access to working capital, small line of credit. That might be a great place to get started there.
Great. Hillary, I know that you have many customers, prospective and new and existing, go to you with a great idea that they need financing for. Before they ever submit an application, how do you as a banker guide them to make sure that this is a good fit for them in terms of the type of loan that they might be applying for? How do you guide them through that process?
So we ask a lot of questions. We want to understand the why, how it's going to fit, what it's going to enhance. And then to what Michael's already covered, we'll talk to the SBDC and put them together with that to make sure the projections are based on actual numbers, they're based on industry standards, and we also work with them for a plan. So we're getting them ready for the next steps, which is what is it going to do for them? How is it going to work? And is it going to add value, and how it's going to be profitable? So we have long conversations. A lot of people say we ask a lot of questions, but that's because we want to make sure we make the right decision and solution for them. So we ask a lot so that we can understand and then guide them to the right solutions.
Absolutely. And Hillary brings up a good point. Every business is unique in terms of the goals they're trying to achieve or the objectives or targets they're trying to meet. And when you work with one of our bankers, they're going to be able to do that initial conversation with you to understand what it is you're exactly looking to accomplish. From there, they'll be able to send you a very clear needs list of the items required to best ensure that your application is submitted and processed with as minimal hiccups as possible. So again, one of the reasons why it's great to have a personal relationship with a relationship banker or commercial banker. Zadell in this case was a new customer to the bank who was introduced to CB&T through the SBA program. Zadell, firsthand, how did Hillary help you with the application process, and once the application was submitted, get through this and get it to the finish line?
Well, I think the very most important thing is that what you say, the relationship. Hillary is like a mother. She is really, like to get a loan. It's very. I feel so nervous. I don't have like. I feel so like, because you're lending money, so you always have that feel of inferiority. But with Hillary, she makes you feel like she's there to help you. She'll guide you. She'll get in touch with you, and she's always available. And I always have a lot of questions, and she always have answers to your questions, and have a very reassuring, answers. And that if there's anything that will not, like if you feel like, oh, I can't do this, and you can, and then there's something that you feel like you don't have those, like, for example, you're not ready for those requirements, so she'll make it work. She'll find ways. She'll help you. She'll guide you. So definitely, it's a place that I feel so like they become like a family to me that I can always talk to and share, and ultimately they will be there to help you get what you need.
Thank you, Zadell. I want to answer one of the questions in the chat, and that's what are the most common misconceptions about SBA loans that SBA owners should be aware of before applying? I'd like to answer that. Number one, I think there is a misconception for business owners that SBA loans are the same no matter where I get it. I'm just going to go online and find the fastest, cheapest, and easiest loan. But what you'll realize after hearing Zadell and Hillary's story is what differentiates California Bank and Trust is when you are looking for a fast loan, at times it comes with a cost, whether that's a higher rate, a broker fee, additional fees on the back end. And when you look at the different terms that are available, especially if it's not a relationship-based bank, that manages a relationship post-closing, you could find yourself in a transaction. And as a business owner, where this is your life and this is your commitment to grow a business, it's really important to have a relationship manager, commercial banker, a bank that focuses on small business by your side, so that we're not just here for you for the application and getting the loan closed, but we're able to help you navigate your business once we provide you that loan. So for California Bank and Trust, to answer that question again, not every loan for SBA is the same depending on where you go. We're known for providing very competitive rates. We're known for making sure we have very, very good underwriting so that your business has the best possible chance of being successful. We are a relationship-based bank who is going to be here for you, not just for the loan, but for the entirety of your business. We are in California for California businesses, and we are going to manage your relationship, and you're not going to end up with some random bank or financial institution a couple months after closing the loan. So relationships do matter, and not every SBA lender is created equal. To keep things going, the next question will be to Justin. When we're looking at a credit application once it's submitted, what are maybe 2 or 3 things that stand out for you and you go, wow, this is a good application?
Yeah, so a couple things that underwriting is going to look at when a loan comes in. Obviously, is the management resume of the individual who's running the business. So what's their industry experience? What's their history? How long have they owned the business, or how long have they been in the industry for buying a business? What that experience looks like. We're going to look at your personal financial statement. So, how much liquidity do you have outside of this business? In other words, if we make the loan and something goes wrong in your business plan, do you have access to a little bit of additional liquidity to keep things going? And then obviously third is we're going to evaluate the business itself. So, what does the business look like? What's the historical cash flow? Or in the case of a startup, it's really going to be solely reliant upon, what's that business plan? What's the strengths of the individuals? And then we look at the projections. I know we've talked a lot about projections today. It's because a lot of SBA loans are used because there's uncertainty, right? You got a startup business, no historical cash flow, which is why we're going to use projections. You got a rapidly expanding business, we're going to use projections. You're buying a business, we're going to look at the historical of the business, but you may be making changes, or you may be buying a business that's struggling. Again, we look at projections. So, but not every business is going to require projections. If you've got a business that's been established, and for some reason you need to get a longer term, or your cash flow is a little bit tight, and so a longer term would help you there, or you want to do large tenant improvements on a new location, right? You don't have collateral there because you're doing improvements to a landlord's place. Great opportunities where historical cash flow in your existing business will let you get an SBA loan because you don't have collateral that maybe secure that loan in a conventional space.
Thank you so much for sharing, Justin. I'm going to take a second to answer a few of the questions in the chat to keep things going. One of them is, if our company has credit card debt, can we use a 7A loan under the 150 program to consolidate and get rid of some of that debt? The answer is yes, you can. There are definitely a few requirements, making sure that the debt is shown that it's for the business. You want to make sure you haven't been late for X amount of months. But if you do have debt consolidation you're trying to do, that is an eligible use of proceeds. And please reach out to California Bank and Trust. We do that on a regular basis. Another question is around franchises. Do you finance a startup if I buy a franchise? The answer is yes. There are some changes that are coming June 1st, where if you are looking to purchase a franchise, they will need to be registered with the SBA franchise directory. And if you're purchasing a franchise that currently is not on the directory and they meet the federal government definition of a franchise, then that franchise will have the ability in June to apply to be on the franchise list. So we definitely help many franchises. We're currently helping many franchises now with loans to get new franchises off the ground. I'm going to turn it back to Mike, because speaking about changes that are coming in June, there were a couple things that many customers have asked about, specifically around citizenship, things made in America, use of proceeds. Can you share a very high-level overview of some of the changes that were made to SBA?
Yep. Okay. Let me just talk a little bit about Made in America. There's a big push to support manufacturing. As a matter of fact, a lot of the loan limits are going to be enhanced. The $5 million limit, they're talking about pushing it to 10 million for those small businesses in the manufacturing world. There is going to be, I want to use the word scrutiny, enhanced scrutiny on citizenship requirements. I think it was mentioned already today that you have to be a U.S. citizen. The people that you're in business with that are going to be part of the loan application have to be citizens. I think green card holders still do qualify. Even in some of the underwriting terms, I think they're going to be a little more rigor into the loan application. Those are things that the lenders are aware of, and they'll be able to work with you through the process. I think Justin mentioned the COVID EIDL loan program during the pandemic when there was the COVID EIDL loans, the PPP loans. When you do apply for a loan now, they look and check the status and the current, if you're current on those programs, and if the paperwork was sufficient and clear and accurate. And so if there's some confusion with those programs and your status with those programs, we have to take a look at that and clear them up. And so I think overall there's going to be more enhanced focus on manufacturing and Made in America initiative. There's an increase in the limits. The manufacturing loans since past 2 months have really gone up significantly. And then there's just a little more, I'm going to use the term rigor in checking the citizenship requirements and the ties to previous loans that the SBA is initiating.
Great. Well, thank you so much for sharing. I know there's a lot of updates that are coming June 1st, and
Yes.
CB&T is committed to making sure business owners understand what those changes are, how to be prepared in the event they receive an approval, and need to review and meet those requirements. Thank you, Michael. I'm going to answer a few more questions in the chat. One of them, is it required that you show profitability, and for how many years if you're an early stage or new company? Justin, do you want to take that one?
Yeah, that's a great question. So any business that's a startup, and our kind of classification of a startup is generally 2 years in business or less, we wouldn't expect them to generally show profitability, right? Because they're getting the business up and running off the ground. Again, that's where, if the loan's above 150,000 in our world, and you're looking for, that amount, we're going to ask for projections. So show us where your business is going, not where it's been. And that's one of the core foundations of, SBA financing to help new business owners who want to get a business started, or maybe who started in the last 12 months and need access to more capital, can get an SBA loan in order to do that. So yeah, it's definitely a core premise. So no, you don't necessarily have to show profitability, especially if you're in the startup status. Now, if your business has been established for a while and it's not profitable, one of the things we'll want to know with your story is why and where is it going? What changes have you made that will turn that around? And why would a projection-based loan in that scenario make sense? In other words, why would you be able to meet projections over the course of the next 12 to 24 months if there's been some sort of major change in the business?
Thank you, Justin. Another question that they asked was, how is it different when you buy a new franchise versus buying an existing? And I think I can take that. If you're buying an existing franchise, we're going to be looking at the historical financials and performance of that business to make sure you're purchasing a business that is either already profitable and meeting the SBA financial guidelines, or you have the appropriate projections, management, and staffing to be able to get it to a level where you are confident and we are confident that you can grow that business profitably. So whether it's a new startup franchise, an existing one you're buying, or one you're expanding, definitely connect with us and we'll walk you through the requirements depending on which scenario you may choose to go with. Another question is, can we refinance loans that we already have in place for equipment and unsecured loans that are privately funded for a better term with SBA? You want to take that one, Justin?
Yeah, so as Adrian said, debt refinance is an eligible use of proceeds. Here's kind of the guidelines that the SBA establishes. for debt refinance. One, the loan has to have been current, no more than 29 days past due for the last 12 months. So we verify that with getting 12-month pay history on that loan. It has to have been used exclusively for business purposes. So I think when the question came in earlier about credit cards, only the portion of the credit card that was used for business purposes would be eligible, including if the credit card was in a personal name, right? We see a lot of business owners when they get started, they use personal credit cards or they go get private money loans to help finance the starting of it. It's a great opportunity for us to come in and refinance those loans. If it's a straight term loan, then one of the things the SBA requires us to do is make sure that we can improve your payment on that loan by at least 10%. So we don't want to refinance a loan that's not going to benefit the business by reducing its payment. But any existing term loan you have that's unsecured, secured, maybe with a private lender, would all be eligible. And the only other thing that we have to do is whatever collateral is securing the existing loan we're refinancing, we have to take that collateral again on our loan. So we're not going to be able to release collateral from a loan if we're doing a debt refinance, but we can certainly help you get better terms on that loan, probably improve your payment, which will help your overall business cash flow.
Thank you, Justin. Another question that came up is, what's the maximum loan duration here at California Bank and Trust? If it's real estate, it can go up to 25 years. Another question we had is, are home-based businesses eligible? And what if the business is located outside of the home? The answer is yes. And of course, once we actually review your request with you, your city, your county, your state may have other requirements, because though you operate from your home, if one of these municipalities require you to do otherwise, that is something that we're going to take into consideration. So if you have a business that you're working from home, but selling a product or providing a service, definitely let us know, and then we could review those requirements with you. The last question before I go back to Zadell and Hillary, and this is for Justin, is what is the maximum loan size CB&T has lended in conjunction with a 504? For example, can we do a loan up to $25 million, for example, with a C-PACE loan?
Yeah, so great question. So as we talked about, the SBA's cap is $5 million. So in the case of the 504 loan program, we as the first lender will generally do a loan that's 50% loan to value on the real estate, which is mostly what 504 years are used for. If you think about the SBA portion, which is generally 40% of the overall project, if that's capped at $5 million and you want to fund 90%, meaning the borrower puts in 10%, that usually puts you in a project size around $11 million. Most of the time, if we see real estate, it's generally not that expensive, but it can be. And then the second part of that question is C-PACE financing. Currently at California Bank and Trust, we do not participate in C-PACE financing as a state-specific program. But if you reach out to Mike at the district office, he probably will be able to connect you with a lender who does participate in that C-PACE financing and would help you get that. It's a specialized program that, if I remember correctly, is funded underneath the state that the SBA participates in.
Great, thank you. I'm going to answer 2 or 3 more questions, and I'll hold the rest of the questions for the Q&A afterwards. Do I need to have a down payment to qualify for SBA? It depends on the loan you're getting and the individual loan situation. Typically, down payments can be anywhere from 0, 10, maybe upwards to 20%, but every loan scenario is different. So this is why it's important to connect with an SBA lender or a banker at California Bank and Trust so they can walk you through that. Another question is, what type of collateral is required? Depending on the dollar amount that you are submitting your loan for, there will be a certain potential collateral requirement. And if you are doing inventory, equipment, or real estate, more likely than not, we will be required to take that per SBA as collateral to secure the loan. With that said, I want to hand it over to Zadell and to Hillary, because ultimately Zadell is the star of the show. She is a business owner, and I want to remind everybody who was able to use an SBA 7A loan program to purchase not just 2 successful businesses, but the real estate that comes with it. So Zadell, I wanted you to share with the audience, having gone through this process, what are some of the biggest things that when you look back, you say, hey, this is what I would recommend for a business owner, or here's how I worked with my banker, or here's why I would do this again. What was your experience? What did you learn? What do you have for the audience?
Well, first and foremost, you just really have to know what do you, like you yourself, what you can contribute for that business. Very important that you buy that business and you yourself must be like on the first time hands-on, and you know what you can do to make it big. Okay, so that's your thing. And when you know that, and you know like the location, the possibility that you can see how far you can go, and also like knowing that you have someone like a California bank, and you know that a lender that could possibly make your dreams, your vision come true. You need to have that kind of good relationship. And it's very important that you have to keep track, you have to be in touch, you have to make sure that you and the business that you're going to buy should be in a good I would say in a good place, or in a good condition, that event that would help you be that will help you close the deal as quick as possible. I think that's
Yeah.
what's very important.
Yeah, absolutely. And to your point, it's identifying the business, knowing the financials, being really, really communicative with your lender. So that way you guys continue to move things forward with your transaction, and ultimately making sure that what it is you're trying to accomplish, your goals, your objectives, ultimately your vision, is in line with the bank, and that we're being very pragmatic about how we're going to help you get there and get there efficiently. I'll hand it to Hillary. Working with Zadell and working with business owners who are going through SBA financing or commercial financing for the first time, what's the approach you take to let them know that it's going to be okay, that we're going to get this done? What is it that you do that makes customers want to work with you?
I think it's communication, letting everybody know where we're at in the different stages, understanding that it's a big purchase, it's a transaction, it's their dreams coming true. So being understanding that in banking, we may know what we're doing and all the paperwork and we're conversant in it. They're not. So it's making sure that they understand what each piece is and why it's important, and just reviewing everything that we need to do to get done to get to the finish line. Because it's easy once the approval is done, but then that's when the work starts. We have to make sure we get to the finish line and get all the paperwork that we do so we can get it funded and close the transaction.
Absolutely. Thank you again, Zadell, for sharing how you were able to get your RC Premier Villa #1 and #2 off the ground. Thank you, Hillary, for sharing what you do for her and what you do for other small business owners. I want to now open it up for Q&A. So for any of our audience members who have questions, you can either put them in the chat or you can put them in the Q&A. And then you have Justin, you have Michael, you have myself, you have Hillary, you have Zadell as a client, all ready and willing to answer them for you. So we'll give it about 30 seconds or so, give people a chance. I know we've already answered over 20 questions, but what other questions do you guys have for our panelists? And while we're waiting for those questions to come through, some of the things I wanna, here's one of them. One of our business owners is asking, Justin, what are the income requirements in terms of qualifying for a loan?
So whenever we look at any type of business loan, the general qualification is that you have to meet a debt service coverage ratio of 1.25%. So that means for every dollar of debt that is being financed by the business, you have to have $1.25 in income to be able to service that debt. Now, obviously, when you look at startups, changes of ownership, and some of those items, you're not going to necessarily have, that historical, which is again where a projection-based loan comes in. Or in the case where we look at those loans less than 150, we generally don't do that calculation on those loans if they meet the SBA's scoring criteria. So, ultimately, based on the size of your business, the size of your loan, there's no minimum income, because you could have a very small business that's looking for a $10,000 or $20,000 loan, where the income needed to meet the debt service on that would be pretty low.
Great. I'll hold on for another minute and I'll ask the audience for any other questions. Please put it in the chat or in the Q&A. Here we go. It's another question. Can you have multiple loan requests? We are needing to gap funding of 150, but we also have a round open for $1.4 million.
Yes, ultimately what we're going to do, the way the SBA looks at loans is any loans done within a 90-day period of time are considered one request. So if you submitted two different loan requests, let's say you had one for 150 and one for 1.4 million, we would underwrite the entire transaction like it was 1.5 million. So in essence, we would do it as, one underwrite, but with multiple requests. This actually comes up fairly often, like in the case of, Zadel's scenario. Sometimes you can do a 7A loan for business purpose, purchasing the business, and you can also do a 504 at the same time. And so you may be getting two separate loans, but it's all one transaction, all related. So yes, as many needs as your business has, whether you want to put them all together into one transaction, or we need to break them out into separate transactions based on what they're going to be used for, we can do either one of those two items for you.
Great. Thank you for sharing that. What other questions does the audience have? California Bank and Trust does 7A loans. We do 504 loans. We do conventional loans. We do investor. And of course, we do traditional, conventional, and credit cards. Here's another question that came through. What are some of the loan repayment structures on the 7A program, rates and amortizations? I'll go ahead and take that one. This is one we take a lot of pride in at California Bank and Trust. We know that every business is unique and their ability to repay, depending on their loan request, is unique. We are able to offer variable rate repayments, 5-year, 10-year fixed repayments, 25-year fixed on real estate. Our rates are extremely competitive compared to the national average. If right now, whatever our published rate is, it's currently 150 basis points lower than that between now and the end of the year. And you guys will find that that is significantly lower than what you will be able to find online. In terms of the structures for the typical 7A loan, you'll have either no prepay or a 3-year prepay at a 531, which is very, very advantageous to the business owner because it allows you, if you are able to scale and repay the loan sooner, not have to worry about a larger or a longer prepay. Some other things that business owners love is the fact that we only charge a maximum of $2,500 for the origination packaging fee. So another lender might charge 1 or 2% for $1 million loan. That could be $10,000 to $20,000 that you're putting out of pocket just to originate the loan. For us, that same loan would be $2,500. Another really good note is for California Bank and Trust, when the SBA reinstated the SBA guarantee fees, many banks are collecting 2% for that guarantee fee. We've made the decision to only charge the minimum required, which is 1.5, and that additional 50 basis points are for you to keep as the business owner, because we know how important it is as a business owner to hold on to capital. And we are not trying to make a profit off of those SBA fees. Some other things that are really nice is when you look at our SBA loans in general, they can go up to 10 years in most cases. So if you're doing a loan with an alternative finance provider, an equipment finance provider, or conventionally, you might have to be stuck with a higher payment, a higher down, and you're going to have less time to repay it. Versus if you're in a situation where an SBA loan is more suitable, you could potentially have a low or no down payment, depending on the situation, a longer term, which equals a lower payment. So those are just different ways that we can structure your transaction to really be tailored to your needs. Another question is, what happens if there's a difference in purchase price and appraisal? Justin, you want to take that one?
Yeah, it's actually not a cut and dry answer. You'd normally think that, if you want to buy a piece of real estate and it appraises for less, that, the borrower, the business owner would just bring the difference to closing if they wanted to pay more for something than what it was worth. The SBA actually does give us some flexibility. For us, it becomes a credit decision. If the appraisal appraises for at least 90% of what we think it's going to appraise, then we do have the ability to move forward, even with a lower appraisal. And for us, it becomes a credit decision. We do make that exception from time to time based on the strengths of the deal. So if we've got a really strong company, strong cash flow, been in business, those are factors that we would look at in order to make that decision. But we do have some flexibility there. On the flip side, if it's a change of ownership transaction, i.e. a business acquisition, we are not allowed to use loan proceeds to finance more than 100% of the value of that business. So it may be a scenario where, if you're already putting in 10%, that 10% covers that difference of what the value of the business is versus the purchase price. again, we may be able to finance, the entire thing, and you're only putting in your minimum 10%, even if that value comes in a little bit low.
Thank you, Justin. And Bree, I know Susie can connect you, but if you look at Hillary Leone, she actually is out of the Bay Area region. So she can connect with you offline. And if you email Susie, she'll make sure you guys are able to connect on your request. Another question is it always required to secure a home if there is equity for a 7A? The answer is no, but I'll have Justin share a few other details.
Yeah, so I know that's one of the common misperceptions, that if you do an SBA loan and you have equity in your primary residence, that we're going to have to take it. That's not the case. That only is mandatory on loans greater than $350,000 if the loan is not fully secured. So in the case if we've got real estate or business assets that fully secure the loan, we don't have to take a personal residence. Or if the loan is less than $350,000, we don't have to take a personal residence either. We only look at business assets. So smaller loans are exempt, larger ones only if there's an unsecured portion, then we'd be required to do so.
Great. One of the questions in the chat is, if I have a business for 4 years and it's not yet profitable, but I need to purchase 125 in equipment for an upcoming $300,000 customer purchase, that would result in $100K after paying for inventory. Is that possibly an SBA loan or another loan? And I'll answer that, but with a caveat. The answer is yes, it is possible, because it depends on many factors. Number one, how not profitable you are, because if you're right at that borderline, but you have a lot of add backs, or there's a reason for it, or you're reinvesting in your business, that could be something that the underwriter could consider. Another thing is your liquidity, your personal net worth. Are there affiliated businesses? So I don't want to say automatically, no, you can't, simply because you're not profitable. That is why SBA provides projection-based loans, and is one of the benefits of working with us, because we'll help you go through the 2 years of projections and see the viability of that request. So great question. I do not see any other questions in the chat. I'll wait another minute to see if anybody has questions, and then I'll go into closing comments and resources when we're done. So please take the time, ask your questions. Justin, did you have something to share?
Yeah, so I see a follow-up to one of the questions that was asked earlier, and that's the funding gap. And the follow-up question I see here is will the underwriter consider new contracts where revenue hasn't hit yet? I think Adrian just answered that, and the answer is yes. Right. One of the things we look at, and actually one of the specific SBA loan programs is designed for a borrower who just got a big contract and needs access to capital to fulfill that contract. So a lot of cases, if you look at a contract cap line, or you look at the working capital program, it'll allow you to fund up to your all of your payroll plus your cost of inventory, so all of your tangible costs, in order to fulfill that contract prior to being able to invoice and receive the revenue back on that contract. So if your business has got the benefit of, you just got a brand new contract and you don't have the capital to fulfill that contract, perfect SBA use of proceeds to let us give you the financing you need to fulfill all of your expenses prior to be able to bill that customer once you deliver the product for that contract.
Great. We'll give it another 30 seconds or so to see if there's any other questions. And if you have questions, feel free to put it in the chat or put it in the Q&A. While we're waiting for those questions to come through, I do want to remind people at the end of the presentation, there will be the resources and the web links that you can click on so that you can get in contact either with us or with the SBA. And I highly encourage business owners, even if you are not necessarily in need of a loan immediately, but you do have plans, you do have discussions, you are talking with your partners or your business partners about it, it is never too early to engage Hillary or any of our other bankers, because as Zadell can attest to, once you decide to move forward, there's dozens and dozens of things you're going to need to consider and think about. And if we can help prepare you in advance with some of those items, it'll make it easier for you to move forward with the process when you're ready. So please don't be hesitant to reach out, even if your project is a little bit further out. One of the questions that just came through is there any additional loan programs that can work with the SBA 504 for additional capital when the SBA portion is capped at 40 and the lender at 50?
Yeah, so great question. So, the SBA 504 loan program probably 99% of the time, we use it to acquire real estate, right? It's used for acquiring assets. The 7A loan program does everything else, including real estate if you want, because it's one loan, but we use that for working capital, permanent working capital, inventory, equipment, all of that. So oftentimes what will happen is if a business has a need for both, we may have to do two loans in conjunction with each other, or if it makes sense, it may just be a 7A loan. But yes, any, as Mike said, any really permissible business purpose that your business would have is likely going to be an eligible use of proceeds, and we can do a loan for you.
Great, thank you so much for sharing that. Olive, if you have a question, I see your hand up. Can you please either put it in the chat or put it in the Q&A? We'd love to answer the question for you. And if anybody else has a question, again, feel free to put it in the chat or in the Q&A. Mark is asking, do you help value an existing business? And I could answer that. If you're in the process of acquiring a business, one of the requirements that we're going to have is for us to order a business valuation. It is something that would be paid as one of the third-party fees, and it's the responsibility of the borrower. But the answer is yes, we absolutely do. And it allows us to underwrite your file based on the value of the business. Anything else to add on that, Justin?
Yeah, so one of the things that you want to look at, if you want the back of a napkin kind of approach to a business valuation, most businesses will sell at 3 to 5 times the annual business cash flow plus any tangible assets that are being acquired. So ultimately, if you're looking at a business that's being sold, you'd look at the seller, you'd look at their financials for the last 3 years, kind of look at that bottom line cash flow. You're going to add back in like your depreciation and amortization, right? Because those are not actual uses of cash to kind of arrive at, what the cash flow is, including the existing owner's salary, right? The owner sells the business. They're not going to take a salary anymore. So you look at that, that 3 to 5 times that annual amount plus the assets, and that kind of gives you a rough estimate. When our partner who does business valuations actually pulls it, they're going to go out just like when you buy a house and look at comparisons. They do the same thing for businesses. They'll look across the United States at all the businesses in the same industry that have sold based on size, pick out the 20 that are most consistent there, and then they'll take an average of those to get us a business valuation.
Thank you. Another question which I can answer is, if I'm in Palm Desert, who's the best person to contact? In addition to the 2 existing legacy CB&T branches, California Bank and Trust, we also recently added to our family the First Bank offices. So if you go to any of those offices and you speak to any of their representatives, let them know that you joined the California Bank and Trust SBA webinar and that if you're interested in financing, and they could connect you with any of our lenders in that market. One of our lenders who's out there fairly regularly is Nathan Villa, and we're actually going to be out there later this month. So if you want to meet in person or want to talk to one of us, we'd love to connect with you. The next question is, for a ground up project, are you able to use appraised land value as part of your injection? Justin?
Yeah, I love that question, right? We talked about, the injection requirement being 10%, but what we didn't talk about is where that injection can come from. So yes, if you already own a piece of land and you've got it free and clear, even if you have a loan on it, any equity in that land can be used towards your injection. What we consider that is just an asset injection into the project. So yeah, it's a perfect solution. Of course, most of the time, people are injecting cash, but if you already own the asset, absolutely, we can inject that in the project, and that may service for all of your needs. You may not have to put anything additional in there, just based on what the overall cost of your project is and what the value of that comes back at.
Great. We have some really good questions you guys are asking. Please keep them coming. Again, I'll give it another 30 seconds. As long as you guys have questions, we're going to continue answering them. One of the questions that came through is, will this call be recorded? And the answer is yes, it's being recorded, and it's going to be sent to anybody who has registered for this webinar, and it'll be sent to them in a few days.